Hi, welcome to my YouTube channel, and in this video I'm going to show you how you can differentiate between mitigation broker and breaker broker and how you're going to trade. So this is going to be the first video where I'm going to show you the difference, and most of people confuse this, and some traders lose in the market because they cannot differentiate between this kind of this kind of concept. Okay, so first of all, for you to understand what is mitigation broke, you have to know that mitigation broke is not mitigation broke is not a line, it is the zone. Okay, mitigation broke is the zone, but also breaker broke is a zone and not a line. And for you to understand what is mitigation block, you have to know the meaning of mitigation. For you to understand what is breaker block, you have to know the meaning of breaker. Okay, so let me start with what is mitigation, and this is very, very important for you. Okay, so let's take an example. You have the downtrend, market is moving downward this way. Okay, so because it is moving downward, it is creating what we call supply. Some call them order block. Okay, so this is our supply. So when the market returns back to the supply above, that is what we call, that process is what we call mitigation. So goes back, when price goes back to the supply or to the demand, that is what we call mitigation. So the process of returning here is what we call mitigation. And mitigation happens when you have what we call certain trend in the market. And if you have maybe you had uptrend, then you have to wait for the shift of market in downtrend for you to have what we call mitigation. So I'm going to show you in another way we can use we can talk about mitigation. It is in uptrend. So when you have an uptrend like this one, and then you have what we call demand because it is uptrend, then the process of price coming back to this demand is what we call mitigation. Okay, that is mitigation. When we go back to what we call breaker block, the meaning of I will go and show you the meaning of. I'm going to show you what is mitigation block. By now, I have just shown you what what is what is what is mitigation. Okay, so what is breaker now? So breaker is something that is like invalidation. Okay, let's take an example. You had this kind of structure, and you knew that this is your order block, this is your demand, so you expected price was going could come back here and keep going up. Why? Because this was the very strong demand. Why? Because if you look there above, okay, I think for you to have a demand or supply, we have like two features. We have breakout structure, which is this one, or breakout structure, or some call it breakout market structure. And then the second thing is this kind of movement, which must have high momentum, or what we call inefficiency, okay, imbalances. So because you have a demand here, most of people were expecting price to come here and keep buying, okay, something that didn't happen. But price did what we call it made a black here. So this zone was broken, and because it was broken, it was invalidated, and therefore this is what we call a breaker. So let me go and show you. So you must have this kind. You don't need to have some shift of market structure here for you to have this kind of breaker. No. So let me go direct to the point and show you what is mitigation broke. So because you know the meaning of mitigation, when you talk about mitigation broke, that means you're talking about something like this. You had maybe an uptrend like this, and then market started coming down, it went up, but price didn't come above this level, okay? And then price moved downward and it blocked the last high. Okay, I mean the last higher low. Okay, the last higher low. So let me show you where. First of all, here we had breakout structure. That means here down, we had what we call a zone which was very strong here, and that is what we call. This was what we call. This was a demand. This was the demand. Okay, before it was broken. Understood? But price went up. It created this higher high. Then we expected the next high was supposed to be higher than the previous one, but it was created below. And this is what we call shift of market structure. In order for you to have a mitigation block, you must have what we call a shift of market structure, SMS. That is very important. Shift of market, shift of market structure, shift of SMS, shift of market structure. Okay, and that mitigation block must be supply or demand. Always remember that. You cannot say here you have, you cannot say here you have, you cannot say here you have a mitigation block. No. Why? Because the movement started here and it didn't break this one. The one which blocks structure is this one. Why? Because market started here moving and it broke this structure. Understood? That is very, very important. That is very, very important. So what could wait here? Because this block, this supply was broken. I mean, this demand, before it was broken, it was demand. And when it was, when demand is broken, becomes supply. So what we were waiting here, okay, because this is, so what we were waiting here for the price to go back to mitigate this one, and this is where we could take our trade. That is where we could take our trade to the next structure below there. This is what we call, this is what we call, this is what we call mitigation block. Okay, understood? That is very, very important. Okay, this is very, very important. This is very, very important. So let me show you what is breaker block. Let me show you what is breaker block. So we were expecting for price to come here, it could keep going down. Okay, so let me show you another. So this is in downtrend, but also you can just go and check for the uptrend. Okay, for the uptrend. So let me show you here. Let me delete this. Let me delete this one first. Let me clear this one. Okay, so let's go to the what you call breaker block. Let me show you what is the big breaker block. Let me use this color here. So when you're talking about breaker block, let's take an example. You had an uptrend, the market was moving upward like this, and then because the movement which started here did what we call blackout structure here above, here we had a blackout structure here. Okay, that means even if you look at this movement, it is with high momentum. That means there is high probability of having this like our demand. Okay, so when markets, this is our demand or order block. Okay, order block, supply and demand are order blocks. Okay, so when market was coming down, it just went up. In breaker block, you don't need to have shift of market structure. You don't need to wait for this kind of, okay, you don't need to wait for this. Understood? In breaker block, you just, market just moves down with high momentum, and what happened here, to block this this which was demand was broken, and now it is what we call supply. It was broken. This order block was broken from here above. And so what do you have to wait? We have to wait for the price to come back to this invalidation level. I mean, to this supply, so that we can sell downward. Okay, so you can see this is what we call breaker block. It is a breaker block. Why? Because this was an order block which was just broken just with this high momentum move. Understood? So you don't need to wait. Don't need to wait for the shift of market structure when you're trading breaker block in both uptrend and downtrend, in both bearish and bullish. So this is the first part of our video. In the next video, I will be showing you in the little chat. But you have to understand, make sure you have subscribed to my YouTube channel, but also make sure that you like. If you have any kind of question, just ask there below. So make sure you subscribe so that you can um, receive all my videos, and make sure you have turned on your notifications so that you can receive uh, those notifications through your phone for those new videos. Okay, so thanks for listening. This is Premium Capitals. Make sure you follow me on Instagram. I'm using Premium Capitals for more setups. So thanks for listening, guys. Have a nice day. Love you all.